Hello and welcome to the day ahead. It is Thursday, March the 19th. I'm Andrew Gagan. Well, the local market is set for a dramatic reversal this morning, with ASX futures down 1 3/4%. This follows a deeply negative session on global markets overnight after Israel attacked Iran's major gas field, while Iran retaliated, striking Qatar's major LNG facility, sending oil and gas prices soaring. Adding to investor worries on Wall Street was the Federal Reserve decision, which saw rates remain on hold, but project higher inflation and just one more interest rate cut this year. Reinforcing that view was a higher than expected US producer price index, which rose 3.4% year on year. Among the biggest movers were Carvana, Trade Desk and AbbVie. Among the tech stocks in the Mag 7, all were negative. And AMD has agreed with Samsung to expand their strategic partnership on memory chip supplies for AI infrastructure. Nvidia dipped after securing Beijing's approval to sell its second most powerful AI chips in China. SanDisk gained while Micron Technology's quarterly report was due after the bell. Asset managers Apollo Global and Aris Management rebounded after sharp losses in the previous week on private credit quality concerns. Lululemon surged after the yoga wear maker's quarterly results. And Macy's jumped after the department store chain said it expected a comparatively smaller impact from tariffs in the second half of the year and beat quarterly profit estimates. The Federal Reserve has held interest rates steady and projected steady unemployment.
Implications of events in the Middle East for the U.S. economy are uncertain. In the near term, higher energy prices will push up overall inflation, but it is too soon to know the scope and duration of the potential effects on the economy.
New projections from the central bank's policymakers showed the Fed's benchmark overnight interest rate would fall by just 0.25 percentage point by the end of this year, with no indication about the timing of such move, given the uncertainty around the Middle East conflict and its inflationary effects.
We haven't seen, the progress that we had hoped for on core goods and on tariffs and on the rest of it. So for whatever reason, people did write up their inflation forecast. That will certainly be tied to events in the Middle East and the price of oil, but it's also, I think, a reflection of the slow progress we've seen on tariffs, which we believe we will see. It's just a question of how long it takes for them to get all the way through the economy, and it just takes some time.
Meanwhile, oil prices have surged again after Iran's Pars gas field was hit in a major escalation of the US-Israeli war. And Qatar's state energy giant Qatar Energy reported extensive damage after its energy hub, Ras Laffan, was hit by Iranian missiles. Here at home, Treasury has forecast that if the war is prolonged and oil rises to $120 by the middle of the year, inflation would reach at least 5%, and the impact on economic growth would be more severe. Well, US Treasury yields rose after the Fed maintained its forecast for a single rate reduction this year. The two-year yield jumped 9 basis points to 3.76%, the 10-year at 4.26%. Australian three-year government bond yields rose to 4.6%, the 10-year was up to 4.98%. The US dollar index up around 0.5% on the day. The Aussie dollar has sunk more than 1%, currently at 70.3 US cents. Well, oil prices have surged after Iran attacked Qatar's energy hub and threatened several energy facilities across the Middle East in retaliation for a strike on its major gas field. Brent crude futures up more than 7.5% to around $111 a barrel. Gold has tumbled almost 4% to around $4,815 an ounce on a stronger US dollar and the prospect of higher inflation. Copper fell 3%, iron ore 1% lower at $110 a tonne, and Bitcoin is down to around $71,000. Locally today, we get February jobs data with consensus forecasts of the unemployment rate holding steady at 4.1% and the employment growth of around 20,000 jobs. That is your day ahead. See you again tomorrow.